Zomato numbers are on our screen. So the top line has grown a smart 64%. Let's see what the bottom line is going to be coming in at, because I think the expectation was that the GOV will keep growing higher for both food as well as for Blinkit. But the question is what happens to profitability, and of course the new apps like, for instance, District that they've launched. Zomato stocks reacting quite sharply on the downside. We'll get to the bottom line in just a bit. In fact, let me see if I can open the press release right now and get any further details on it. No, doesn't seem to be having too many details. As of now, I think we only have the revenue numbers, so we'll get to the others in a bit as we go forward. I think we do have Mitesh with us while we get to more of the fundamentals around this and more of the numbers start trickling in. Mitesh, Zomato kind of has gone into a bit of a range now after having a pretty stellar last few months. What are the levels, immediate levels now for this?
To me, I think, Sulbi, this is a first, sign of some kind of a correction. The bigger supports for the stock taken around 220 to about 210 zone. It's rallied from 50, sub 50 levels to about 300 without any kind of a significant correction. So I think now is the time when the charts are suggesting that the stock either will do a price-wise correction or a time-wise correction. I think a time-wise correction already started, failed to sustain about 300. Time and again, it's come back to about 240 levels. But in case 240 breaks and there's a chance of that, then I think 220, 210 is the range where the stock could possibly, take a breather and sustain.
By the way, on the profit line, I'm talking about now for the company as a whole, the net profit line. The profit has reduced over the previous quarter. Profits at 59 crores versus 176 crores in the September quarter. And obviously, these companies will be gauged more quarter on quarter just to see if that turnaround story, that improvement in the internal ratios, whether all of that is sustaining or not. So this is just the net profit number. So let's wait for it. We'll get it Mangalam to give us some more of the details. In fact, I think we've got Mangalam. Mangalam, how's it looking?
Well, the numbers aren't looking particularly bad. If you are concerned about why the profit of Zomato is down by about 57%, remember they are on that expansion spree when it comes to quick commerce. And at the same time, they made an acquisition of, Paytm's going out business as well. So as a result of which, the depreciation, which is a non-cash expense, has increased from 128 crore to 247 crore. And that has resulted in, the bottom line being a lot lower than the same number in the previous quarter and the same time last year as well. But year on year, these numbers would be a lot better because quarter on quarter, they have the seasonality impact, which will make it look a lot better anyway. So look at year on year, 64% revenue growth at 5,400 crores. And the company is on an operating leverage, mode. And as a result of which, the EBITDA is up nearly 218%. 51 crores turns into 162 crores. And the bottom line, like I pointed out, impacted by depreciation. If you look at the segments as well, food delivery, out here the growth has slightly slowed down at 22%. But then again, the company has been speaking about, that business being in a lot more mature phase. And the driver for the food business will be the operating profit, not as much, acceleration in the revenue. Here, that has played out. The operating profit in the food business has grown by 67%. Margins in food business have increased from 15% to about 20% on an operating basis. Quick commerce, now that is the revenue driver of the company, and year on year that has seen a massive jump of 113%. Quick commerce has shown revenues of close to around 1399 crores versus 644 crores. And at the same time, the EBIT out there, the losses have been contained. The same time last year, they made an operating loss of 56 crores. And this time around, it is a loss of 30 crores. So the revenues have doubled, losses have nearly halved. That's a positive. And finally, going out, a business that they acquired and see a lot of potential in, there the revenues have come in at 259 crores versus 73 crores. And this time around, they have been investing in that business, as a result of which it's made a loss of almost 15 crores on an operating basis. The only thing they have to watch out for is Hyperpure now. Hyperpure, which is the B2B business, has shown a revenue of just about 13% in terms of growth at 1671 crores. The street would have liked that to grow a lot faster. So if you look at the overall numbers of Zomato, not particularly bad. Year on year, there's a 64% revenue growth, and as a result of which, the EBIT has grown a lot higher. The net profit has been impacted by higher investments in, quick commerce and the acquisition of the going out business. Quick commerce growing in triple digits, and the food delivery EBIT margin increasing by 500 basis points. I think the street should be content with these numbers.
But Mangalam,
yes, please.
yeah. So, no, completely take your point on the net profit declining because of depreciation. They've been investing in their other businesses, so therefore That point is well taken. I just want to draw viewers' attentions back to the quick commerce loss, because the thing is, in September we saw a profit and the street was super excited and happy. Now, again, I'm just comparing September to December for the sake of comparison. From a 48 crore rupee profit, they've gone into a 30 crore loss. You're saying maybe we should not look at it that way. There could be seasonality, etc. I mean, year on year, like you're saying, the losses have come down. But September was a profit, December is a loss. How should we read this?
So what you basically do is look at the acceleration in their store addition as well. So maybe the number of stores that they added in September were not as much as they added in December. The quantum of store addition, etc., will be known only once, the company gives out its information docket to the analyst. My sense is that up until September, when the company was adding stores, a lot of stores matured as well. They would have increased the pace of store addition in the December quarter in line with, getting ahead of the festive season, etc. as well. So maybe that could have been a reason why, the revenues of the company have doubled while the operating losses have narrowed. So instead of looking at it quarter on quarter like that, just look at how the revenue has grown versus whether there has been an increase in losses or there has been a decrease. So long as there is a decrease in the loss and the revenue is growing, that means it's in an investment mode, and these numbers are pretty chunky when it comes to different quarters, depending on the number of stores that you would have added in that particular quarter itself.
I have that number for you because their letter to the shareholders is out, and I think it's exactly what you're saying. The Blinkit store count has crossed the 1,000 store mark 1 quarter ahead of plan.
Yeah.
And now they're aiming to get to 2,000 stores by December 25. I mean, look at that. They're going to double their store count by the end of the current calendar year. So I guess you got it spot on. Maybe because they've been rolling out stores so aggressively, that's why what was a profit has swung into a loss. But I mean, if it's investment in the business, maybe it's a good thing.
And the other thing is that they had targeted 1,000 stores in Blinkit by fourth quarter and 2,000 by fourth quarter of next year. They've brought that forward by 1 quarter as well. So now it'll be 2,000 stores by third quarter FY26 as against fourth quarter FY26. So that is a long-term positive as well. So they are accelerating their store expansion. That in the near term may be impacting their EBITDA, but the fact that they're doing it ahead of what the street is anticipating means that, there could be, if not, some upgrades to the estimates. There could be some, bringing forward of their growth, estimates as well by the analysts, largely because the company is rolling out stores faster than what it had guided for, and the guidance was something that the analysts were working with. I'm not sure if, there is any commentary on the competitive space and the margin profile of the Blinkit business, because that is something that the street will be eyeing as well going forward, given the competitive intensity in quick commerce. So if there is any commentary around that, the street may react to that as well. But basis the numbers that have come by and the commentary so far that we're aware of, it's nothing really to worry. Maybe one can argue about, the valuation of the stock or the future of quick commerce itself, but these numbers seem to be pretty much on track with what the company has been promising and what the analysts have been expecting as well.
Absolutely. On quick commerce, they go on to say that the adjusted EBITDA is lower by 14%, driven by investments in expedited new store openings and new customer acquisition in quick commerce. So they're investing heavily into quick commerce. That could explain it. Having said that, on the food delivery side of the business, they are acknowledging the slowdown because they're going on to say that the muted 2% Q-on-Q GOV growth in food delivery is driven by the broad-based demand slowdown. So it's a mixed picture. It's on Zomato. Let's quickly get in. Thanks, Mangalam, for that. Let's quickly get in a view from